Hur politisk risk påverkar amerikanska tillgångar är ett återkommande och ännu mer aktuellt ämne idag. För ett år sedan diskuterade jag det bland annat med Karsten Junius på den schweiziska privatbanken Safra Sarasin. Då varnade han från att plocka ut för mycket pengar från amerikanska aktier. Men den senaste tidens händelser påverkar ett annat tillgångslag, nämligen obligationsmarknaden.
Well, people are more aware of the risk and also of that the rule of law is nothing that we can trust as much as we usually did when investing in the US. It was a no-brainer, and now we are discussing shortfall risk. What could go wrong and where to invest, how to diversify.
And how do you diversify? The traditional advice or the traditional portfolios, of course, are 60-40 between equities and long government bonds, often from the US. Yeah. This part of the portfolio has become a matter of discussion now. Your thoughts on that?
Well, it's so fascinating to see how correlations between U.S. equities and bonds have changed. Usually, you could hedge your equity risk with U.S. bonds, but this is gone. We've seen in all these latest crises, you name Venezuela or Greenland or the attacks on the U.S. Fed and Powell, that it's not treasuries and the U.S. dollar benefiting in this environment. It's gold that is benefiting in times of crisis or perceived political uncertainty. And I would still think that this is something that we should take seriously and increase our allocation to gold, even at the high levels that we are seeing right now.
But how defensive is gold when it's been traded to such, for us, extreme levels? Your thoughts on the risk it means when you're higher up, essentially?
That is true, but do we have any alternatives? I really don't see them, because all other bond markets are really not that liquid. They are not that big. And for US dollar investors, it's important that they all come with a counter risk. And globally, we have plenty of investors who don't want to have counter risk. Yeah? They are US dollar thinkers, even if they try to diversify from US treasuries.
In this unusual market, I've been observing that the dollar has been weakening when equities go down in the past week. It's supposed to be the other way around. Could you talk a little bit about this anomaly?
Exactly. Now it's for decades, and as long as I can think. It was whenever there was a crisis, whenever there was a reason to sell equities, the US dollar would go up and US treasuries would go up, meaning their yields would fall. And now we see a different pattern, different correlation. People don't flee into the US dollar. People don't flee into safe treasuries anymore. They seek safety somewhere else and find it in gold, find it also partly in the Swiss franc. But I think gold is the most liquid and available asset that we have for safety-seeking investors.
So this is interesting. That would speak against owning a lot of American equities as well, because the dollar weakening has been such a big factor.
So yes, you mentioned that U.S. equities had a good year, which is true. For foreign investors, it's less true, as we did not benefit from a stronger dollar as we did all the other years. But the dollar depreciation actually reduced our portfolio returns, and I fear this is going to continue, as we still see that the U.S. dollar is not cheap. It's trading, in our calculation, around 16% above its fair or long-term or real fair value. So we still have some way to go. And even if the US dollar is not crashing, but we would assume that it's depreciating by 3-4% year after year, and that is already quite a bit.
That's quite a risk. Should one have money in the currency you plan to retire in? Is that a good life advice?
Well, I think it's an easy, natural, and very cheap hedge for your private expenses. Have some investments in the currency where you have your spending. If there is Swedish krona, you should have some Swedish krona investments and not all in US dollars.
It's a very uncertain world, but we still have pretty good growth outlook, and we're entering a hot year where the Americans obviously, but the Europeans as well, seem willing to spend quite a lot. So I take it growth and equities will prevail in the future as well.
So in our portfolios, we deliberately overweight equities because we believe that it's kind of safer investment environment than the one that we had last year, where a lot of shocks came actually very unexpected, like the US tariffs, or on a positive side, the AI disruption that is coming. All that is known now. So we think, we are getting used to this age of disruption, and it's now the time to adapt slowly, not to rush out of equities or any other asset class, but to shift portfolios a bit towards gold, but towards European equities, out of long-term bonds, more to maturity, immediate maturities. So make small adjustment, no big moves.
Given that we believe in a strong economy or in government spending quite a lot, would cyclicals be a good bet? And I also want to ask you, answer first.
Absolutely. It's cyclical. We see that governments are really spending big time. It's not only the US, it's also Japan, it is Germany, and it's the Netherlands and many other countries as well. So, and that comes after a year where fiscal policy was more on a side that was reducing household incomes, like through the tariffs in the US. So that's a big swing factor, and that should stabilize economic growth and reduce the downside risk of investing in equity markets.
Healthcare has been surprisingly weak in some parts of the world. Any thoughts on that sector on the equity side?
Well, absolutely. I think there's a lot of political risk priced into this sector, as we know that the US administration wants to reduce healthcare costs for the population, which would be a good thing. And many people fear that they would put additional pressure on companies producing those things. But that is a known risk for a while, and that's really in the market. So that's why we believe that's a sector that is cheaply valued, and that should be a structural overweight in a portfolio that is actively managing different sectors.
We started a conversation discussing American long bonds and the political risks surrounding them. I want to mention Japanese long bonds as well. Now, for the first time in a long time, you get decent money out of them. What are the implications for markets?
Well, first, that Japanese investors finally can invest domestically, don't have to buy European bonds or US bonds, and therefore will more likely not shift their safe savings to those countries. So, meaning that not only Japanese bond yields are increasing, but they will have repercussions on the US Treasury markets and European bonds. So that could mean, or should mean, that yield curves will steepen further, meaning that the long end of the yield curve would become more higher yielding. Not a good perspective for governments. And here comes the main risk. We see all this fiscal spending, but we don't have any answers on fiscal sustainability and the sustainability of government finances. And on top, we don't see that there's any willingness to save in countries like the US, and no ability to come to consensus in a country like France that definitely would have to save in order to secure the sustainability of their debt.
Lastly, we started talking about political risk affecting bond markets. How do you approach political risk affecting equity markets. We had a scare after the Greenland discussions. This could very well happen again, given the dynamic of the current White House administration. Your thoughts on political risk derailing the strong equity case you just described?
Well, I just expect political risk. So it is coming, and the waves are coming shorter. It's actually incredible. I don't even know whether it was only about Greenland or whether Trump wanted the press not to talk about the Epstein files anymore, or about the shootings in Minnesota. And so I'm not really sure what his intentions were. But in any case, the recent episode shows that he doesn't like to have big market movements or downside risk in this election year. And he's reining in whenever there's too much opposition, or when financial markets show too much opposition. That is a good thing. Still, I think it's safe to diversify, to de-risk a bit from the US and build portfolio, very balanced portfolios in general.
Karsten Junius, always a pleasure. I hope to see you again in a year's time.
Absolutely. My pleasure. Thank you so much.